Welcome everyone, welcome back to the Liquid FX YouTube channel. Here we have a special request from one of our loyal subscribers, the Euro AUD, right? The Euro against the Australian dollar. And we start on the monthly time frame. So this is a market which was requested by, again, like I said, one of our subscribers, and I hope to deliver as much value to each and every one of you for free here on the channel. So like and subscribe, stay tuned. We're going to be going over the higher time frame, so the monthly, the weekly, the daily. I may sneak peek down to the 4 hour, but I won't typically go below the 4 hour on YouTube. The reason for that is because I keep a lot of the lower time frame stuff for our members. It wouldn't be fair on them, but higher time frame stuff is typically all for free, and I post it on Twitter anyway and Instagram, so feel free to follow me there. But anything I say on the higher time frames is generally very much applicable on the lower time frames because the markets are fractal. So let's begin with the analysis. Here we have the monthly time frame, right? And we're pretty much bearish with our structure, right? So the way that I use the Fibonacci tool is very, very simple. You want to project the Fibonacci tool from the swing high all the way down to the swing low, right? This here represents two areas, which I go through a lot. We have a premium up here and we have a discount down here. So when it comes to identifying our premium and discount ranges and our structure over here, which broke structure over here, which is bearish, right? BOS, break of structure. Once we have our structure and our dealing ranges and therefore premium and discount arrays set, what do we look at next? Well, notice this wick over here that's been highlighted in yellow. We've had a fill of a fair value gap. So this fair value gap over here to the left was filled. So we have an FVG or an imbalance in price that's been filled. And therefore, based off the monthly time frame, what do I expect? I would expect price to come down all the way to here at some point. It doesn't mean it's going to happen next week or next month or anything like that. But based off our monthly time frame, we have a weak low over here because this low hasn't made a new high. It stopped over here and has since then come down, right? That's the first reason. And the second reason is that we have two things beneath us, right? What are they? The first thing I need to draw your attention to is we have a fair value gap over here in price. So this is an inefficiency in price or a fair value gap that I've highlighted here in blue. And this is the monthly POI to reflect that. And the second reason is that we have a trend line that's formed over here, which is, as we call, sell side liquidity, right? SSL or sell side liquidity. These are the two reasons why overall on the very, very higher time frames, I expect lower prices. But when we go down to the weekly and the daily, you'll see why my bias will be different. And that's exactly what we're going to do now. So if we now jump down the time frame, we're going to go to the weekly. Right. So our weekly time frame paints a slightly different picture. So I'm going to bring you all the way back to the year 2012. So we had a chalk or a change of character over here. This is a monthly fair value gap that hasn't been filled. This is where my chalk occurred. And since then, what have we seen? We've seen structure break to the upside once, twice, and now we've produced a high up here, right? So how am I analyzing the weekly time frame? It's very simple, right? What we've seen over here is we've seen price trade from this swing low down here up to this swing high, all the way up here. Now, let's now dissect price action a little bit clearer and see what am I looking at in price and what do you need to train your eyes to look at? You need to train your eyes to look at two things. Two very, very simple things. The first is liquidity, and the second is fair value gaps or inefficiency. So where has the liquidity been swept and where has price mitigated? Very simply put. So let's see how we can dissect that. Let's see how I can explain that to you. Look at this. Very massive trend line over here, right? This is an inefficiency, sorry, this is a trend line and therefore represents sell side liquidity over here. We had a fair value gap over here, which I've represented in blue. This little blue box over here is a fair value gap, and this is the subsequent POI. So price has now tapped into this POI. Notice how price doesn't enter with the body. It's only the wicks that come into this zone. This here represents a very high probability rejection, and therefore we have rejected very simply. So what is my overall projection from the weekly time frame? Well, I have a bullish bias, and the reason I have a bullish bias is because price has reacted off a weekly zone over here. This is a weekly zone, so we can't ignore it. Weekly POI respected, right? The weekly POI has been respected, so we filled a bullish fair value gap. So after prices swept sell side liquidity and tapped into a bullish fair value gap, where are we going to target? Well, it's very simple. Price price over here on the weekly time frame left, sell side fair value gap, a sell side inefficiency over here. So this here is a bearish fair value gap. So I'm going to label that weekly, which is the month, which is the weekly time frame. That's also left us a fair value gap over here. So we have a fair value gap above the target, and we have price respecting this POI in the discount. So therefore my narrative is bullish on this pair, okay? Which is different to the monthly. So let's go down one more time frame and see how I'm viewing that daily time frame. So the daily time frame paints a very similar picture where we've had 3 breaks of structure to the upside. Notice how our structure is quite obviously bullish over here. So we see price giving us a high, we've broken that high, we've retraced, and we've broken that high again, we've retraced, and we've broken that high again. So structurally, we have seen price do this. Price has given us 2 or 3 breaks of structure to the upside. Now we're dealing in this range over here. Notice how we have our weekly POI up here and a refined daily POI inside it. So I would expect price to reach the higher time frame levels initially. Again, how am I looking at the daily time frame? What's the daily time frame telling us? Well, we're going to be using the same concepts again. We have a structural low down here and we have a structural high up here. That represents our swing. So beneath the 50% level, what do we have? We have a discounted low. So this discounted low has filled in the majority of the fair value gap to the left. So this is the left fair value gap over here that's been filled, FVG. So we see a fill of this fair value gap just over here in the discount. So now why is my bias long on the daily time frame as well? Well, it's the same 2 reasons. We have equal highs up here. So this is our equal highs. And we have price leaving inefficiencies up here. So you want to target yourself, right? As traders and analysts, you want to understand where are the liquidity pools. In this case, on Euro AUD, we see them over here. So the liquidity pools in the form of equal highs have been produced. And we have a fair value gap just over here on the daily, right? So we have a daily fair value gap. We have 2 reasons to look for higher prices based off inefficiencies and equal highs and buy side liquidity. Notice how price has given us a discounted low and filled the majority of the fair value gap over here. And we have a weekly fair value gap to target all the way up here in line with current bullish structure, right? Because we've seen price break 1 high and 2 high. Okay, so my overall narrative on this pair, Euro AUD, is bullish simply for the fact that we have higher time frame fair value gaps and higher time frame liquidity to target from discount to premium. Okay, so that's a quick breakdown of how I'm looking at Euro AUD. The person who requested this, I hope this helps. If you have any questions, please feel free to put them in the comments or message me on Twitter or Instagram. I'll be more than happy to get back to people. Just want to say again, at Liquid FX, we're offering free one-to-one sessions for anyone who wants to learn simplified ICT concepts, right? So if that's something that interests you, again, drop me a message on the socials, Instagram and Twitter, and I look forward to seeing all of you in the next video.